a mail to just volunteer.
Okay, let me say something.
Okay.
Please, can you all hear me?
Yes, I
Yeah,
can
we
hear
can
you,
hear
sir.
you.
Okay,
Hearing you.
I also work in the hospitality industry as well. So at the end of this class, I'm expecting to know how to file my VAT and how to do my company accounts, file my company tax as well.
Okay, thank you, sir, for telling us your expectation. So it is my hope and actually my desire that at the end of this class, we'll be able to like I think I would have been able to like meet your expectations, if that's the word. So let's just go into it. Please, I would like us to actually pay attention because we are going straight to the point. I'm not here to tell us what VAT is or what VAT rate is. We are going straight into the practical session and then we see how fast we can go. I want to try as much as possible not to take too much of our time, but as much as possible to I mean cover up all that we need to cover and then give rooms for question. So let me share my screen. Can you see my screen now?
Not yet, no.
Not yet.
Okay. Please let me know at any moment in time you can't see my screen so that because
Okay,
I'm actually sharing just a particular window now. So let me know when you can't see my screen anymore. So, but
okay.
can you see my screen now?
Yeah, sure. You can see welcome to TaxPro
Yes.
Max.
Okay, makes sense. So I will be starting with VAT, and I'll run us through how to file VAT. I want to believe we know how to compute VAT. We know the VAT rate. We know what VAT is. We know what to charge VAT on. But then I just want to go into how to compute VAT. Currently in Nigeria, I mean, as of today, the VAT rate is still 7.5%, and which is being charged on VATable goods and services alone. And you charge it based on the contract amount of the service rendered, right? So that's what you charge your VAT rate on. And so the FRS platform, the FRS, yeah, they are the one in charge of the collection and administration of value-added tax, companies income tax, withholding tax for corporate bodies, capital gain tax, petroleum profit tax, and so on, right? So they majorly focus on taxes relating to companies, right? So why the State Board of Internal Revenue Services, they majorly focus more on taxes relating to individual business name, partnership businesses, and so on. So the platform in which the FIRS used to administer these taxes is the TaxPro platform, and to log into TaxPro is taxpromax.firs.gov.ng. So that's the platform. So once you type that on your browser, you click on login, and then it gives you opportunity to put in your email address and your password. I mean, for your company, right? So once you do that, you click login. So once you click login, it gives you the dashboard of the company you want to file for, whether it is where you work or whatever. So then you click on taxes due. So majorly this is where your VAT would appear, your CIT return that is yet to be filed, your I mean, all your taxes due will appear under the taxes due side of things, and then the concluded assessment is where your what's it called? Your taxes that you filed, it will appear under your concluded assessment because it means that you've concluded the filing and of course you've concluded the tax remittance. Then the tax wallet side of it is where you have your it's more like your, what wallet, most of us that are using Piggyvest and other financial institutions saving app like that. So this wallet is majorly where you have your wallet. It shows you the balance of whatever tax liability you have left to clear off in terms of maybe arising from tax audits or what's it called? Arising from tax investigation. So imagine that the FIRS has raised 1 million naira tax audits for the company, and maybe you don't have the capacity to pay it at once. You can choose to pay it instrumentally, and whatever balance that you have will show up under your tax wallet and the like. So that's what tax wallet is majorly for. And then we have ledger balance. Please give me a minute. Okay. So we have ledger balance. Ledger balance shows the for example, whatever balance also that you have from your taxes due. Let's say you filed a particular tax and then you are yet to make the payment, right? The fact that you have not made the payment is going to be showing under your ledger balance as an amount that you need to pay. And then additional assessment, this will arise as a result of any additional assessment raised by the FIRS. It is still pending, will show here. The taxpayer details obviously tells us about the details of the company, their team, their address, date of commencement of business, and the likes. Then the group taxes is all about, this is where you file taxes that are in group. What do I mean by in group? That is taxes that involves a lot of beneficiaries, right? Like for example, withholding tax. So withholding tax will follow that is group taxes category, stamp duty, and the likes, because it comes with, you are uploading a schedule that has to do with a lot of beneficiaries. Although I was telling a friend the other day that even VAT now needs to fall under this group taxes because VAT now, I mean, you need to upload, you're uploading for a lot of beneficiaries as well. Unlike before, the way VAT filing was before, you just put the amount, you don't need to upload anything. But now that the system has changed last year, that you now need to upload a schedule to file your VAT returns. So it now makes it look more like group taxes, then put it that way. So, and then on the credit report side is where you have your credit report that shows details of your utility tax credit notes, capital allowance credits, and the likes. Even your input VAT credit as well will appear here. And then your process TCC, this is where you apply for TCC for your company. This automatically links you to the e-service portal, and then you'll be able to apply for your TCC, provided that your company is up to date with the tax obligation. And then we have the assets manager that has to do with this is where you record let's say there's a case of disposal of an asset, the PPE schedule of the company majorly will appear here, and then if there's any disposal of assets and all of that, you can easily do that from your assets manager. And then your info board, this is where it's more like your inbox, where the FIRS communicates to you. They can ask you to okay, upload bank statements. If they want to pass any information to the company, easily they can do that through the info board. And then the audit and investigation records, this is where any completed audits, investigation, all of them, this is where they are being recorded. So that's basically what the overview of the FIRS, TaxPro platform is all about. And then now, so let's go straight into VAT filing. Please, am I making any sense?
Yes, you are.
Okay, good. Thank you. So for now, for this company now, the only taxes due they have pending is their VAT filing, right? So for VAT, you click on process. In Nigeria, we operate a preceding year basis tax system. That is, your tax for 2020, you pay it in 2021. Tax for 2021, you pay it in 2022. Same thing to applies for VAT. I mean, VAT for January, but because VAT is payable monthly, not annually. So the VAT for January, you pay it in February, the VAT for February, you pay it in March and the likes. So now we are in July. No, we are in June. So it means that we are remitting VAT for May. So once you click on process, it will bring this to you. Then you have the sales schedule, we have the purchases, the sales adjustments, the VAT return form, and the likes. So your sales schedule has to do with, once you click on that, it has to do with, this is where you upload your schedule, right? You upload your schedule, and there's always a template for whatever schedule you want to upload on the TaxPro platform. So all you just need to do is to download the sample template. Once I click on that, it automatically downloads. I think I need to share my entire screen so you can. Please, can you see my screen?
Yeah.
Yes.
What can you see on my screen now? Just want to be sure you're seeing the right thing.
The VAT sales schedule.
Okay, makes sense. Thank you. So this is what I downloaded from the FIRS platform. Let me try and see if I can split my screen so that, yeah. So you just need to download the sample templates, right? Once you download it, it gives you this template, as you can see on the screen as well, on the other side of the screen. So all you just need to do is populate it with the beneficiary name, the beneficiary's thing, the item that was sold. For example, maybe you sold diapers, the cost of the items. If you have any further description of the item sold, is it baby diaper or adult diaper or whatever, you put it there. And then the VAT status as well, you put it there. So we have 0 status, we have 1 status, and we have 2. 0 means that that particular item is VATable, right? Why 1 means that it is 0 rated, and then 2 means that it is VAT exempted. So automatically, once you put the VAT status here, either it is 0 or 1 or 2, once you upload that on your FIRS platform, the system automatically categorize them based on the VAT status you have inputted for each of the transaction. I don't know if that makes sense. So, but I mean, that's how you do it. Once you populate your schedule, automatically the system would classify them based on the respective VAT status. So let me assume that this is okay. I will just close it, save it, and let me see if I can upload that. So upload. So I'll click on upload. So once I upload it now, you can see that the system automatically captured them. It has identified the VATable. So please, can you mute yourself, that person? Hello. Oh no. Thank you. So automatically the system, once you upload the schedule that you've populated, the TaxPro system will automatically classify them based on the VAT status you've imputed. So we have the one VATable, we have the 0 rated, so we have the VAT exempt. So automatically you are more like learning 3 things in one. You are learning how to file VATable goods and services. You are learning how to file exempt income, that is VAT sales exempted from VAT. You're also learning how to file what 0 rated items, goods and services, and likes. So once you do that, ensure that your thing matches with your company's name, so that you're not giving VAT credit to another company. So then you upload it. Then you click on proceed. once you click on proceed, right? So then you move to the next item, which is the what opportunity side of. For example, now if maybe last month you've already remitted VAT on sales made to a particular customer, and eventually the customer had to return that goods back to you that they are no more interested, maybe due to a faulty issue or whatever. How to file VAT. Any questions so far? Now let's move, in absence of any question, let's move to withholding tax. So withholding tax to, like I said, when I was trying to like explain the
Please, I have a
dashboard of,
question.
yes, please.
I have a question.
Yeah, go ahead, sir.
A question too.
Okay. My question is, we the hospitality industry,
Yes.
we
Yes.
have a whole lot of guests checking into our hotel. You get?
Yeah.
Yeah. Then individually, it will be very difficult for us to be charging VAT as per guest. You get? So
Yeah.
what we do is that the total sales, you compute your daily sales on a daily basis. At the end of the month, you have a total sale. For instance, you have a total sale of 15 million.
Yeah.
Do you understand? When you sum up all your sales from the sales of room, from the sales of food, from the restaurant,
Yeah, I get it.
sum
I
up,
get it. Yes, I
everything
get
sum
that.
up to 15 million. That 15
Yes.
million, I will not charge 7.5% on it, on the total figure. I don't know why doing that is wrong or right.
So that's right in the sense that you cannot be given a list of, you don't even know the list of all the customers, you don't know their details, so you can always do it
Yes.
as a lump sum. But what I will advise that you do is to that 15 million, you need to convert it back to the contract amount, because that 15 million is already inclusive of VAT that your customer paid, right? So if you are charging VAT on 15 million, it's more like you are um double counting. I mean, like you're charging VAT. It's more like you're charging VAT twice, because whatever thing that your customer are paying you guys is as revenue is already inclusive of the VAT. So if you're now charging VAT on that figure straight up, it means that your VAT will be on the high side. So you need to first of all convert that 15 million to the contract amount by separating the VAT element of that 50 million away, and then calculating the VAT on the contract amount. I don't know if you understand what I'm trying to say.
So how do we separate it?
So let's say, for example, now, although I'm not supposed to be taking question now, I think that's a
Okay,
mistake
sorry.
on my end. So 15 million, let's say this is your sales. Right? This is the sales. And then your VAT is supposed to be 7.5. Right? So
Yes.
now if you are charging sales 7.5 on this 15 million, the figure, the VAT payable will be high because this 50 million is already inclusive of VAT. Because I mean, if your customer is paying your company, of course, they're paying you VAT as well now. So that means
Yes.
this money is already inclusive of VAT. So you cannot be
Okay.
charging VAT on VAT again. I don't know if
Okay.
you understand what I'm trying to say.
Yes, yes, yes.
So you need to convert this 50 million back to the contract amount. And the easy way to do that is to what? Do a walk back by saying, okay, let me divide 50 million by 1.075, right? It will give me the contract amount, which is this. The difference between this and this is the VAT that they paid you guys, right? So if you now want to calculate your actual VAT that you're supposed to pay, it will be 7.5% of 13,900,000 and something thousand. So that
Okay.
means the VAT that they paid you, which is the difference between 15 million and this, is this VAT rate.
That's
Do you
what you should.
understand what I'm trying to say?
Yes. So
So this
that
is
the
what you
file.
should calculate VAT on, this 30 million and not 50 million. I understand the part of you trying to sum them up together because you cannot be remitting for each customer since you have a lot of customer. That
Yes.
makes sense. But if you are calculating VAT on 50 million, you are paying high VAT, and that's very, very wrong. You can see that the difference. You can see the difference between what you are paying and what you are supposed to pay.
Yes. Yes.
So I think that
Okay,
makes
sir.
sense that way.
Thank
Yeah. So I think we'll just continue with question later so that I can, because I don't have much time
Oh,
and
no,
I'm
please,
trying to.
I'm so sorry to cut in. Please, that's 1.075. Where do you get the rate? Is it just assumed rate or what? Is it a static rate?
It's not assumed rate, or it's a walk back because what it means is that what your customer is paying you is 100%, which is the contract amount. Contract amount is always 100%. Contract amount is always 100%, right? And your VAT is 7.5%. So normally what your customer will pay you will be what? Will be 100% plus the VAT, which is 1.075. I mean 107. So now if you are doing this, 100 divided by 100 is equals to is 1. Do you accept this 100% is the same thing as 1? Are you agreeing with that?
Yes.
And then 7.5% is the same thing as what? 7
7.5.
point.
No,
No, it's the same
0.7.
thing as 0.075. Are you agreeing with that? So that means what your customer, what they are paying you is what? Because to this plus this, I don't
Okay.
want the percentage to show.
Okay.
So it means that they are paying you, don't mind it's the approximation, it's supposed to be 1.075. It's because of the approximation that is showing 1.08. So it
Okay,
means that
yeah.
what the customer will pay you, they are paying you 1.078. So for you to get the contract amount back, you need to divide what they paid by the 1.078. I don't know if that explains it.
Yes, very okay. Thank you.
Okay, good. Makes sense. So it's just like you are doing mathematical work back. It's just mathematics. It's not anything special. It's mathematics. So that's about that. So let me move to. So now on VAT, now on withholding tax, you click on group taxes, right? So once you click on group taxes, you see your withholding tax. And like I said, withholding tax applicable to FIRS is for corporate bodies, that is for companies, right? And once you click on withholding tax, it will give you the type of withholding tax that you want to remit. So the first one is if you are remitting for dividend or for interest or bank interest, you click on the first one. So anything other than that, you click on others. Let's say maybe you want to remit for withholding tax on contracts, on consultancy, on on director's fee and the likes. Or no, director's fee will be to LIRS, I mean to the state. But any other one aside from dividend and interest would be applicable. You just click on others. And also, like I said, you have a template because you need to upload the schedule here as well. You have a template to follow, which is the download sample template. So once I click on that, it will help me, it will download the sample template for me as well. I'll just open it. It's loading. Yeah. So this is the template that you're meant to populate to upload your withholding tax schedule, right? So most times people have issues when it comes to uploading this withholding tax schedule because, and it's mainly because they are not following the format, the templates. So once you follow the template, the way it is exactly, you are doing what is on it exactly. You are replicating it the same way. I trust you, I bet you will not have any issues. So you start with your beneficiary's name, which is the name of the beneficiary, the companies that you want to remit withholding tax for, the beneficiary's TIN, the transaction date, the service description. Most times I just use service rendered for all, and then the transaction amount, which is the withholding tax you want to remit, the rate, the type of tax, withholding tax, the tax amount, and blah blah blah. So that's basically it. And your reference is, most times I use 0 as my reference. So let me just say I just put 0 here. And like, so once you are done populating the schedule, ensure that you follow the same format. The way the date is being arranged, month, days, and year, try to like follow it the same way and ensure that you are not using formula. You're not copying and pasting formula. Ensure that you're copying and pasting only values, because this template is done in such a way that it does not accept formulas. So if I'm doing formula on this template and I'm trying to like upload it, it won't go, right? And also ensure that your date aligns. For example, now we all know that April is 30 days. So if you are saying that your own April is 31 days, the system will not accept whatever it is they are uploading because the date is not correct. So all of those little things, you need to, take note of them and to ensure that you have your withholding tax schedule uploaded properly. So that's that about that. So once you are done populating your schedule, you go back and then choose the file wherever it is to upload it. So let me just pick one that I've done before. Withholding tax. Withholding tax.
You have a question on withholding tax?
Yeah, I think we'll just take question after so that,
Okay.
yeah. So let me just pick this and upload this, proceed. So once you populate it properly, the system will capture everything, and then it will show you all the things that you have populated, and it will show that everything aligns. So ensure that your thing aligns with the beneficiary's name, and then the amount, everything aligns as well. So that's basically it. I don't want to click on proceed because this is just a sample. But once you click on proceed, it takes you automatically to the payment platform, whether you want to pay through Remitter, you want to pay online, or you just want to download your DIN, your DINs to take it to the bank to make payments and like. So that's basically how to file VAT, withholding tax on the FIRS platform. So that's that about that. So any question on this?
Okay,
Can you ask
yes.
your question now? Let me see if it's something I can quickly answer, please.
Yes, the question on
Yes,
withholding
I have
tax.
okay.
Okay, how do you come up with a figure that you file on withholding tax? How do you come up with the computation of withholding tax?
So we have once you go online, we have, most times I work with PwC tax summary. Let me just say withholding tax rate in Nigeria, WHT rate in Nigeria. Google is your friend. So it will bring majorly the PwC tax summary, right? So it will tell you the withholding tax rates that we have in Nigeria. No, this is not what I'm looking for. Yeah. So this tells you the withholding tax rate applicable for all transactions. For example, for consultancy now, for companies is 10%. For individual is 5%. Do you understand? So all the rates, you just need to know your rates of withholding tax and know what is applicable per transaction. It depends on the nature of the transaction with the customer or the supplier. So that's what you calculate your withholding tax. I mean, your withholding tax rate on. And any tax you are calculating, any rate you are calculating, whether it's withholding tax, whether it's VAT, ensure that you are calculating it on the contract amount. That's very, very important. And the contract amount, you most likely find it on your invoice. So it is when you don't have your invoice, that is when you need to maybe do a work back the way I did. I mean, somebody asked that question the other time. That kind of work back. You can also do the same thing for withholding tax to ensure that you're not paying high tax rates. Does that answer the question, sir?
Yes, sir.
Okay, makes sense. Any other question?
Yes, please. I have a question.
Yeah.
Okay, it's concerning VAT. I work in a real estate company. I know we don't sell goods nor render a service. VAT, is it applicable or I don't think it is. I just want to make clarification on that.
So for VAT, right? Yeah. On whatever sales you make, maybe you sell land or
Actually, developers, we don't sell, so we build. The client invests a certain amount of money, and it takes for like 3 years for us to develop the property. So when it's done, we hand over their property to them, and they become the owners.
Okay, so I get it. Because there's still a misconception around whether rental income is vatable or whether land is vatable or no, I think that's I think I'm mistaking it for petrol and diesel. So, but for if you're in the real estate industry, the nature of your service is not vatable, right? But nevertheless, whatever sales you make from non-vatable services, right? You are still meant to file them. That's why we have the exempted filing of VAT side of it. You know, I was saying that we have VAT status of 0, 1, and 2. The 0 is for vatable items, the 1 is for zero rated, and the 2 is for VAT exempt. So for example, now let's say you guys made a revenue of maybe 2 million, right? Maybe on whatever development you make on any property,
Yeah.
right? And maybe there's a portion of it that is non-vatable, right? You classify it based on that, and whichever portion of it that is vatable, let's say maybe on every development that you make, you guys have service charge that you charge the individual or the clients, because I'm sure you don't just sell land at the cost price alone. You have your own service for developing any property. Maybe there's any service charge, or maybe you also have other side of the business that is into maybe
Utility and all that.
so I mean it's not all the revenue that will not be vatable, let me put it that way. So if it happens that it is like that, categorize them. The one that is the percentage that is vatable, put it at 0 VAT status. The one that is non-vatable, put it at the VAT status that is applicable to it, if that make any sense.
Just to be clear, for example, now let's say we sold a property worth 1 million naira.
Yes.
I won't charge VAT for it because we have other subsidiaries like the facility, the subsidiary of the company where we handle the facility of all the estates. So I know those ones will charge VAT, but I just want to make clarification on that exact sale of the property. if VAT is
No. So
applicable, but
on
if
that
the,
exact sales, VAT is not applicable because it's not actually a revenue. It's
yeah,
I don't know what it's more like it's a cost. It's not a revenue, right? So you can't apply VAT on that because it's a cost for you guys to do whatever project it is that the customers instructed or wants you guys to do. So that's not a revenue. VAT is majorly on revenue, and it has to be on vatable or not because even there's some revenue that is vatable and there's some that is not vatable. But majorly is majorly on sales. So and in this sense of it, this particular transaction is not a sale. It's more like they're paying you for what they're paying you for the land that they want to acquire. That's not a revenue.
oh,
So
thank you very much.
yeah. So now let me quickly move to CIT. Um, so now for CIT filing, I'll just try as much as possible to run us through it because I don't actually have a real CIT, a real account to file, but then it's pretty simple. Once you know it, once you know the principle, I mean, that's okay for you, right? Because let's say I have an account to file in the real sense now, that would have made a lot of sense. So majorly what this CIT filing is all about is that your tax computation and your audited financial statements, those figures, you are imputing them on TaxPro Max. Because all of these things already, you have them on your account, you have them in the AFS. So it's just more like you are replicating them on TaxPro Max, right? And once you are done imputing those figures on TaxPro Max, all you just need to do is to ensure that it aligns. That is, the CIT liability payable is the same thing as what you have in your tax computation that you have already done. And you ensure that your accessible profit is the same thing as what you have on your tax computation. Your profit before tax is the same thing as what you have in your account. Your your total assets, total liability. I mean, all those key informations that you just ensure that they are the same thing as to what you have in your account. I don't know if that makes any sense. That's basically CIT filing. Is that very simple, right? So it's just more like you're replicating your account on TaxPro Max. So you start with revenue. I mean, what's the revenue figure in your account? Whatever it is, you put it there and you click on proceed, right? If it is loss that the company made, put the loss today, click on proceed, right? So that's that. Once you click on proceed, automatically it takes you to what? Non-current assets. So non-current assets now. Let me just put 0. Click proceed. So automatically it takes you towards non-current assets. So non-current asset is if, for example, the company has an addition, right, in the course of the year. So this is where, well, let me try and see if I can get there's a presentation on this CIT thing. Wait, let's just proceed. So your addition, that is if you have any assets acquired in the course of the year, right? You input them here, you click on addition. So automatically it will give you where you have to impute your asset acquired, if it is tangible asset, if it's intangible asset. If it's tangible asset, for example, you click on tangible assets, then the category, right? If it is land and building, if it is furniture and fittings, if it is motor vehicle, click on it, motor vehicle, for example. And then if you want to give it more description, you say motor car. Motor car. What date was it acquired? So depending on the date that you acquired the assets, let's say January 1st of January 2024, the cost of the assets, let's say 3 million. You put that. And then this rate is your what? Is your capital allowance rate. Mind you that you know that in tax, we don't deal with depreciation. Depreciation is is a desirable expenses. So, but in place of depreciation, we have what? Capital allowance. So instead of depreciation rate here, it is the capital allowance rate of that particular asset that you will put. So what's the capital allowance rate of motor vehicle? So capital allowance rate of motor vehicle is 2520. So or 5025. Yeah. Whatever capital allowance rate it is, I think it's 2520. So you put that here, or if it is 5025,
Capital allowance for motor vehicle is 5025.
5025. So you put the 25% here. So I think furniture and fittings is 2520. Right. So the capital allowance rate, you put it here, which is the annual allowance rate here. So that's 25. And then you click on proceed. Right. So once you click on proceed, it means that you've added the additional asset that was acquired in the course of the year to the non-current assets. And then it will now ask you to, let me just click on proceed. I'm going to delete it back because what is saying? You have to enter division value for it. Okay. Where's the asset I inserted now? You have to enter division value. So now, okay, I get it. So you need to, once you are imputing the additional assets you are acquiring each year, you are also putting the depreciation value. And the depreciation value, for example, would have been gotten from your from your account. Let's say in your account, the depreciation value for motor vehicle is 500,000, right? So that 500,000 is what you add as your depreciation value on that particular additional asset that was acquired in the course of the year. And then you click on proceed. So once you click on proceed, it takes you automatically to the next line item, which is the current asset. Just give me a second. Let me try and see if I can get this document I'm looking for. That will explain this thing better for you guys. Just let me stop sharing my screen. Stop. I'm still here, just give me a second. I'm trying to look for this document. Yeah, I see. Yeah, I've seen what I'm looking for. Makes sense now. Share my screen. Now, can you see my screen? Hello.
Yes, we can see your screen.
Okay. So let me start from. Okay, so this is where we this is where I was talking about. So once you are trying to like add your new addition of assets. So you click on the additional asset that was acquired in the course of the year, which is tangible assets, put it there, the amount, and then the capital allowance rate. You click on proceed. So once you do that, automatically, if you have intangible assets as well, you do the same. Automatically, it takes you to where you need to, where's the point? It takes you to where you would know the total cost of the asset acquired and then the total depreciation for the year. And then it will now ask you to what? To enter your post-depreciation. That is, some companies, they have, they recognize depreciation as part of cost of sales, while some companies, they recognize it under operating expenses. Some companies, they give it a percentage. They can say that, okay, 20% of this depreciation figure is going towards cost of sales, while the remaining 80% is under what? Operating expenses. So whichever one that is applicable to your company, that's what you apply here. So most times it is always 100% under the operating expenses. So you just put 0 under the cost of sales side, and then you put 100% under the operating expenses side, and that automatically takes you to current assets. Now, this current assets now, this is where you would put in all your current assets in your account. I mean, we know where current assets is in the account. It's under the statement of financial position. So whatever current asset that you have there, you populate it and you click on proceed. Same thing, your cost of sales. Whatever that is on your cost of sales in your account, you populate it there as well and click on proceed. So you are trying to like add the record of your cost of sales, and then once you are done, you click on proceed, which automatically takes you to operating expenses. And of course, you know that operating expenses has to do with all the expenses incurred in the course of the business. You populate that one as well by imputing all those figures as it is on your account into the operating expenses side on TaxPro Max. Once you do that, it takes you click on proceed again. It takes you to what's it called? All these ones you can, all these directors emolument are not necessary for you to put anything there. You can just click on proceed, Professional fees. They just want a breakdown of who you pay the professional service fee to. So those ones are not really necessary, except if you have the information to provide. So once you are done with that, it takes you to your current liabilities, which is where you will populate all your current liabilities figure as it is on your account. So majorly, it's more like you are imputing your figures from your account on TaxPro Max. That's it. It's not like you are doing anything special on this TaxPro Max. So once you are done with that, you click on proceed. It takes you to long-term liability. So long-term liability as well, you populate it as you have it on your account, and you put it there as well. You click on proceed, and then it takes you to the ownership and capital structure, which is your equity side in your account. So whatever capital structure the company has, you put this as well. If it is 1 million ordinary share or whatever, you put it there and you click on proceed. Same thing, your your reserve, which is, it includes your retained earnings, share premium, general reserve, and other things that you have on your equity side of your statement of financial position. You populate them too on TaxPro Max and you click on proceed. And then it will take you towards profit adjustment, which is where you would adjust for any desirable expenses and the likes, right? For example, now let's say you have can anybody give me an example of desirable expenses? Just to know if you are following yourself.
Depreciation.
No, I think depreciation is,
Depreciation.
you can already see that one on my screen. So depreciation
Okay.
is already common. So let's say, for example,
Meal and entertainment.
Tax expense.
entertainment, yeah.
Commissions.
Tax expense.
Entertainment, general provision, all those things are desirable.
General
So
provision.
you have to,
General miscellaneous.
yes, you have to add them back to your profit, and that is done under your profit adjustments. Mind you, all of these things, you would have done them in your tax computation already. So it's just more like you're implementing them or inputting them on TaxPro Max. And then once you are done with that, you click on proceed. Then you move to balancing adjustment. So this is where, let's say, for example, there's a disposal of any assets, or so the adjustment will be done here to determine the sales proceed, to know if there's balancing charge or there's balancing allowance from the disposal of the assets. Once you are done with that, you click on proceed as well. Then it will give us a breakdown of the profit position or the loss position of the company. Here, you are not inputting anything. It's just a breakdown of what the company stand is. And then you click on proceed. And then here you have your capital allowance. So this is where you confirm if the capital allowance is correct with what you have in your capital allowance computation. So, and if this is not correct, that means something is wrong somewhere. Whether it is from your non-current asset side, you just need to double check and ensure that it aligns with your capital allowance computation. Then you click on proceed as well, which will take us to it will take us to the CIT form, which obviously give us the overview of what we have done from the beginning. So the CIT form is just more like it should be like something like this. So these are the CIT form will look like, giving us the breakdown of what we have imputed so far on TaxPro Max. So you just need to confirm that your tax payable is the same thing as what you need to pay on what you are paying on your tax computation. You need to confirm that your assessable profit is the same thing as what you have on your tax computation, your total liabilities, total assets, your net assets. I mean, those key things like your profit before tax is the same thing as what you have in your tax, in your account. So that's basically it. I think I'm done. I actually have to move to another webinar in a minute now. So I mean, do we understand what all I've been saying so far? It's not clear.
Yes, sir. For me, I understand. Sir, please, can you share this document with us after
Yeah,
the?
definitely I will share it with you. I'll share it.
Thank you
Because
very much.
when you look through the document, it explains that's why I was trying to like look for the document initially, because it explains everything, honestly.
Hello, please, can we ask question now?
Yes, please.
Okay. Sorry, please. In inputting our operating expenses, can we only input the allowable expenses and leave the non-allowable ones, instead of inputting everything and later be adding it back?
No, I mean, you need to input everything, because if you don't do it that way, your total operating expenses will not be correct. So you need to impute everything, and then you can adjust
Okay.
for it back.
Okay.
Yes.
Thank you, sir.
Yes.
Please, I have a question.
Yes, please.
You talked about, or you discussed on how annual allowance or initial allowance will be treated, but you didn't talk about how the annual allowance will be treated for the
No,
tangible assets.
I only spoke about annual allowance. Initial allowance, you don't need to bother yourself about it. The tax format system will capture that automatically. You know that one is claimable just once in the life of the assets. So, but the annual allowance is what you should bother yourself about by imputing yourself. Initial allowance, the system automatically calculates that itself.
You mean the annual allowance is being calculated automatically by the system?
No, the
Then
initial allowance. Initial.
Okay.
Yes.
Hello, sir.
Yes, ma'am.
Okay. Sorry, please. The current assets. Do we need to be inputting it every tax filing, or we can just input it once and?
No, it's every account you are filing. That's where you
Okay.
input everything. Yes.
Okay. Unlike current asset that you can just input once.
No, that one is, current asset, non-current asset is account until the useful life of that particular asset is expired. You cannot
Yes.
throw it away. But current assets is just within a year. So you have to keep on adding it every year. Yeah.
Okay. Thank you, sir.
Yeah, hello, sir.
Mr. Terhemba, please, can you let me take over from here so I can join the other call? I think I'm already done. You just
Yeah,
need to
hello,
take over
please.
more
I have a
questions.
question, sir.
Okay.
Okay, sir.
Okay, sir. Yeah, hello, sir.
Yes,
Yes,
please
please
go
ask your
ahead.
question.
Okay, please, with this illustration that you've just given now, how can one upload this account now on the TaxPro Max?
So you would, once you are done with everything, you've confirmed your CIT form that everything is correct, then you just need to click on the declaration part, tick it, and click on submit. Once you click on submit, it automatically takes you to where you will upload your account. So once you upload your account, then you can easily, from there you'll be able to it will transfer you to where you will make your payment. Either you want to pay online or you want to pay at the bank. But I'm not filing a real account, so I can't upload any account, because once I upload any account like this, it means I've submitted the account. Do you understand?
Yes, I do understand. Thank you so much.
Did you say you don't understand?
Question.
Yes, I understand. I understand.
Okay.
Yeah, thank you
Please, I
so
have a
much.
question.
Please go ahead. I will take over from here. Thank you so much, Mr.
Okay,
Adebisi.
please, he talked about uploading an account.
Yes.
Does this one also have a template? And what account are we uploading? Is it the audited financial statement or what?
Yes. Okay, let me take over from here. Thank you so much for your question. This is how it is. After you have, okay, hold on, let me bring it up on TaxPro Max so that it will be clearer. Are we together, please?
Yes, we are together.
Yes.
Okay, sorry, I'll be taking over from here. TaxPro, I don't know why TaxPro Max doesn't want to. Let me bring it up. Can you see my screen? Can you see my screen?
Yes.
Okay.
Yes.
Okay, thank
Yes,
you.
we can.
All right. Let me look for an account. One of my account. Okay, let me open this one. So, okay. I'm looking for an account that I have not filed yet, so that I will be able to explain better. Okay, let me think. I think I have not filed this one. This one has not followed up for some time now, so this is an old account. So let's use this one. Okay, can you see the screen?
Yes.
Why is it coming up?
Yes.
Yes, you can see.
So we're looking at the CIT, right? So after we have filed, this is the page where he was filing that got to that last page where we had to submit, right? Are we together?
Sure.
Okay.
Yes.
Okay. So let's start something. Let me bring up an account where we'll use and file quickly, but we'll not submit it so that because the test phase. I want us to get this thing very well for this CIT filing. So what can you see on my screen?
Welcome to TaxPro Max.
Okay, that's the only thing you can see. Can you see the other shared screen?
No.
Yes.
No,
We can see it. We can see.
You can see that the screen is shared into two, right?
Yes.
No.
no.
How many people can see the shared screen?
I'm seeing Mid-Near Wellness Limited.
Okay, that's the only thing you can see.
Yes.
Yes.
You can see two screens, so everybody's seeing just one.
Just one screen.
Just one.
Wow.
Just one.
Okay, I'm trying to divide the screen so we can see the audited account also. Can you see it now?
Yes.
Yes. We can see both of them.
Okay. So this, all of us know what accounts is. Accounts means audited financial statement. For us, the accountants, we may not say, always call it audited financial statement, but when we say accounts, when I started the profession, when they say account, my head will be going to bank account. But now, I've become used to it that we just, or even as reflex, we just say account, and everybody understands and we move. But then to a layman, account may mean bank account, right? So when you have your audited financial statement, which is your account from the auditors, and you wish to file it yourself, right? Or if you are a consultant, you are filing for a client, you need to have the audited financial statement with the audit seal. We all know what an audit seal is. There's this auditor's page. It's very important. Or the FRS will not process your accounts if there is no audit page. I believe we know that by now, right?
Yes.
Okay. So this is it. This is the current
Yes.
the financial position aspect of this financial statement, right? Is it clear? Can we see the financial?
Yes.
This is financial.
Yes, yes,
Yes, we
yes.
can see.
Yeah.
We'll come to our TaxPro Max here. This TaxPro Max is misbehaving this evening. If I want to click it, it goes off. Okay. If I'm clicking to open the tax due, it logs off again. Okay. These clients, we have been working for them, but they have not renewed our service contract, so we abandoned the accounts. That's why you can see a lot of taxes pending without filing, without being filed. Okay, let's come to revenue now. Can you see here? Revenue.
Yes.
Yeah.
Yes, yes.
Right. This tax promax is misbehaving. We click on it, it goes off. What it is? Okay, this is revenue. Before you put revenue, you always have to indicate Naira sign, right? Because we're in Naira and what do they say in accounts? Is it functional currency, right?
Yes.
It's Naira. Is it functional currency for a currency using your
Transaction currency.
transaction
No.
currency?
Functional currency.
Okay, it's functional currency or transaction currency. Okay, that doesn't actually matter, but we'll understand that we're trying to use Naira. So I will file this account in the main. I file this account in the main tax format, the tax format for this company. That's why you can see this figure appearing here. This is the revenue figure. It's 7 million. Can you see it?
Yes.
Yes.
Side of the screen. Look at where the cost of 87 million. So this is 87 million here. So I wouldn't need to type. I'll just click it since I filed it and this. going on. So you click on errors and proceed. So we have proceeded to the non-correct aspect of it, which is correct assets addition. So we'll come down to the depreciation, computation of depreciation, right? Notes to the account will come down, come down, come down. Okay, so this is notes to accounts, right? So addition. So we're going to add the assets we bought, right? So what type class of assets is the first one? Motor vehicle. So we'll click here and look for motor vehicle. Motor vehicle, is it tangible or intangible asset?
It's tangible.
Okay. Assets. So we'll click on it. Then we'll select the type. What is the type? Okay, see here, motor vehicle expenditure, right? We'll click on it. And depreciation, I said description, sorry. Description is what? Motor vehicle.
Motor vehicle.
Yeah. Then the date of purchase. This date of purchase is the date when the asset was purchased. So for this, let's just use first, since we are filing 2023 accounts, let's use January 2023. But then this is the date the asset was purchased. Are we together?
Yes.
Okay. Then cost. The cost of the motor vehicle is how much? 3 million.
3 million.
Yes. Then the depreciation rate. If we'll go back to the account, to the notes to the account here, as you can see, motor vehicle, the depreciation rate is 5 years. Can you see it? Motor vehicle, furniture and furnishing and cost. This is the notes to the account. So they say motor vehicle 5 years. So if we are converting it to percentage, what percent will it be?
20.
Good, good. This person, your head is hot. So hope we understand that part, please. Everybody understands why we're using 20%.
Yes.
5 is simply 100 divided by 5. If you say something is going to be 5 years, if you say something is going to life by 5 years, the useful life of the asset is 100%. So 100 divided by 5 years, each year will take 20%. Okay, that's clear. So add record. Check. Okay, that one has added, right? That one has added. So if we come to this side, see that we have not added depreciation value yet, right? But that one has added.
Yes.
Okay, so add the next asset. What's the next asset? Let's come down. So I'm going to also be explaining the flaws of this TaxPro Max to you as we are ongoing so that you understand. So let's let's take furniture and fitting first before we address computer and equipment. There's a reason why. So this one too is tangible asset, right?
Yes.
Yes.
Then furniture and fittings. Look at it here, furniture and fittings. Click on it. Description. Furniture and fittings, right? Date of purchase.
Yes.
Let's assume it was still purchased on the same date. 2023, January. Let's assume it was purchased on this date too. Cost, what's the cost here?
1,207,000.
1 to 3. Then what's the rate? Let's go up and see. What's this? What is the rate? Furniture and fitting in 5 years, which is how many percent again?
20.
Then we'll add the record. Okay, that one was added again. Then we'll come back and pick what's the next one? Tangible furniture and fittings, right?
Yes.
So computer and
equipment.
Computer and equipment.
Okay. So the thing is, on TaxPro Max, there's no provision for express provision for computer and equipment. So if you look at it here, you will not see. Let's be scrolling through together. What is this? Building, right?
Building. Yes.
Mining expenditure.
Non-industrial.
Plant, excluding furniture and fittings.
Plants, excluding furniture and fittings.
Okay.
Agricultural plant expenditure.
Okay.
Manufacturing industrial plant expenditure. Furniture and fittings expenditure.
Okay.
Public transport motor vehicles.
Okay.
Motor vehicles expenditure.
Okay.
Plantation equipment expenditure.
Okay. Next one.
Construction plant expenditure, excluding furniture and fittings.
Okay. The next one.
Research and development expenditure.
Okay, let's go down.
Housing estate expenditure.
Okay, the next one.
Land.
Okay, let's go down.
Ranching and plantation.
Okay, let's go down.
Others.
So where does furniture and fitting fall here?
Computer and equipment.
Sorry, where does
Maybe we
computer,
choose others.
Others.
right?
We choose others.
Yeah, in a likely situation like this, what you are going to choose is others. But then, as we're ongoing, I'll explain to you why this others is not the best decision. So let's choose others and proceed. But that's the likely decision for us to do, but that's not the best decision. I will explain. Someone should remind me as we are proceeding to explain this. So description, the type is others, right? Then description, computer and equipment. This explanation I want to give you on this is very important. Because what happens is, when I will proceed, I will explain why I said, you are going to see why, and I will explain why it is not the best decision. Okay, what's the cost?
1,300,000 can't see very well.
1,380,123. 1,380,000.
380,000.
Okay, what's the depreciation rate now?
25%.
That would be 25%.
25%.
Good, I'm happy we're all synchronizing. 25% save. So let's come back to impute the depreciation value now for each of them. So click on the depreciation value. So someone should help me pick a calculator on your phone quickly and calculate something for me. 20% of, we said 20%, Abi? 20,
Yes.
1,207,000 is how much? 1,207,000 how much?
241,000. 241,400.
Okay, but look at the financial statement. What is the depreciation value they presented here?
241,400.
No, on furniture and fittings. No, I'm talking about
19566.
Okay,
195,666.67.
Okay, can someone have an idea or have any knowledge why it is so?
So because the depreciation method being used by the company is not actually acceptable to the tax people. Tax people use just a normal capital allowance instead of using all these different type of depreciation like straight line method, reducing balance method. I think the tax people use just the straight line method in the form of capital allowance.
Okay.
Hello, sir.
You're actually
Can I try?
correct, but you're
Hello?
actually correct, but that's not accurate. Someone else?
Hello.
Yes, go ahead.
It's because the tax people have already charged initial allowance on the assets before charging annual the depreciation.
Okay, that you are also correct. Once in my class, there is no absolutely correct answer and there's no wrong answer. That's how I do in my class. Because why? Someone may want to ask why. Because everyone is learning. No one is an island of knowledge. At every point, we get to learn new things. So let me not allow us go too further about this. Why it is so is, in our organization, there's what is called fixed asset schedule, right?
Yes.
And on that fixed asset schedule, furniture and fittings, this is a sum of the furniture and fittings, and it may not be all the furniture and fittings that were bought in one day. So every furniture and fitting, for instance, we bought chair and table on the 1st of January. Into the year in July, we bought chair and table. Share the total cost will sum up to the 127, but then the depreciation rate will not start from the January for all of them, right?
Yes. Yes.
Yes.
So that is why for this furniture and fitting, it's likely that most of the furniture and fitting were bought into the year. So the depreciation rate has applied for only the few months up to the end of the year. Addition to the other depreciation for the other asset that started before the year. I don't know if what I'm saying is making sense.
Yes.
Yes, it is.
So that is why, but then the tax promos took the cost and just charge 100%. They didn't take into cognizance the value of your depreciation on your depreciation schedule as an organization. Is it clear?
Yeah.
Is it clear, please?
Yes, it's clear.
It's
Okay,
clear.
so now we understand why what is here is different from what is here, right?
So please, can you go over it again?
Okay, I said in our organizations as accountant, there's what is called depreciation schedule.
Yes.
Here at every point we buy our assets, we depreciate them based from the month it was bought. For instance, if the asset was bought on the between 1st to 14th of the month, we can start depreciation on the first day of the month. If it's bought after 15th to the end of the month, we can move the depreciation to the first day of the next month.
Yes.
And most of the assets are not bought at once. For instance, I buy table and chair 1st of January. Then in July, we buy table and chair. You cannot start depreciating assets in July from January.
Yes.
But then when you are presenting your financial statement, you are presenting the total cost of the assets on your depreciation schedule for that category. Then the depreciation is different. So it's the sum of the depreciation. Some of the depreciations may start from January, some may start from June, some may start from July, some may start from August. But all the depreciation ends at 31st December. That's the last day of your accounting year, right? So by the time you sum all the depreciation, it may not be the same if you charge that percentage on the total cost. I don't know if it's clear.
Yes, because of proration, right?
Because of proration. Because on your depreciation schedule, you'll be depreciating the assets individually based on the month it was bought.
Yes.
So at the end of, but in a case where, okay, this is for, okay, when we do the motor vehicle, we'll get to understand better. This is furniture and fitting, right? So let's pay attention. As we're entering our depreciation here, we're going to enter the value on our financial statement, which is, let's pronounce it together, 190,566.67, right?
Yes.
Then, by the time we have added, it has changed. You see, it has changed here to this depreciation we put here. Though it's 20%, it has changed. Then our net balance is 1 point. This figure is the same figure that is on our account, right?
No.
So let's go to the next one. Let's go to the next. Okay, we have added it, so we are going to proceed. Then let's go to the next one. The next one is what? Okay, please pay attention. Anybody that didn't understand us, pay attention very well. This next one we're going to do is motor vehicle. What is the depreciation value motor and the accounts? Let's look at what is the depreciation value, the what do they call it? TaxPro Max presented here.
600,000.
Look at the what is here?
600.
600.
Now explain to me why this one aligns. Any idea why this one aligns?
Probably all the equipment were bought on the same day and there was no proration issue.
Good. This is motor vehicle, and this motor vehicle is just one.
Yes.
You understand? This is motor vehicle, and this motor vehicle is just one. It was bought at the first month of the year. On the second, and the motor vehicle is just one. That's why it aligns perfectly. That person that was asking, is it clear now?
Yes, sir.
So let's write it here, 600,000. This transformer was logged out again. Transformer is FC. This, I don't know, these servers in Nigeria are always not strong. CACO, FRS,
all of them.
How Nigeria don't, I don't know if we need to. We have money to do all these things, but then the thing is logging out. And we're actually enjoying our
And it's a weekend, though. Who is on the platform today being weekend?
Okay. So we're at additions before this thing messed up. Okay, so this is it, Abi.
Yes.
We have added depreciation for Motor vehicle. Okay, now furniture and fitting, computer and equipment. So we'll not we will not get to explain much. Yes, just to type the depreciation value because understand it's the same case with furniture and fittings. Are we clear?
Yes.
Yeah.
Same case with furniture and fittings, so we'll just not explain too much. All right. So we'll not explain too much. We are done. So we understand the implementation of the asset and depreciation now, right? So let's really frustrating. So back here, my colleague was explaining something. Okay, not here. Okay, proceed. It's in the next page. So on this page now, my colleague was explaining something. Some organizations assign depreciation to cost of sales, some assign depreciation to operating expenses. But the normal thing we know as accountant, depreciation is always presented in administrative expenses, which is operating expenses, right?
Yes.
Yes.
So we are going to say that 0% of depreciation allocated to administrative to cost of sales. So we'll put 0 here, which is 0%. Then 100% of depreciation was allocated to administrative expense. Is it clear?
Yes, sir.
Good. So that is that. Then we'll proceed. We'll proceed. So we'll come to current assets. So we're going back to our accounts now. Where's our account? Someone should still remember that I said I was going to discuss about why we choose orders in computer and equipment, right?
Yes.
Yes.
So let's go back to our account. What is our account saying? Okay, let's look at the current asset of the financial statement. Okay, the current asset will have inventory and cash equivalent. So inventory here, the inventory amount is what?
6,132,445.
Yeah. You know, inventory is always presented at what? Cost. Right?
Yes.
Okay. So someone may want to ask why it hasn't 445.
Lower of cost or nationalized value.
Good, good. So we're going to add inventory. Then what again? Cash and cash equivalent. You click here. Cash and bank. Look at it here. Cash and bank balance. Click here. What is our cash? Please mute yourself. Who is that person? If you're having noise in your background, you can mute yourself. Okay, thank you. So the amount of cash and bank balance is
1,272,551.20.
0.20. So add that. So I've added that record. So we're going to proceed. Then we are going to, where are we now? Cost of sales. Good. The accountants, if your organization actually if you have your what do you call it, your account, have a detailed record of your opening inventory, add purchases, add carriage inward. You know, well, who remembers our trading accounts? So this is a trading account. This is how it starts, Abi.
Yes.
Get our cost of goods sold. Yeah. Good. To get our cost of goods sold. So if you have this thing detailed in your financial statement, you can be putting them there one by one. But if you are like me that is lazy and don't have that in our financial statement, you can just come down to other costs. Can you see it here? You can just come down to other costs and go to your, this is profit and loss item. Go to the profit and loss, cost of sales. direct cost. Can you see it? Direct cost.
Yes.
Come to other costs here and just sum all of them and put 63 million.
402,688.54.
And put add. You understand? So I've added this here. It has not come here. Total 63,402. I will move. Time no day. But if you have it detailed, please present it in details. You understand?
Yes.
Please have it in detail. Present it in detail as you be. Don't be like me. So we're going to proceed from here. All right, this has village people have come and log this out again. All right.
Sorry.
It has even said error. And I need to do well with their text space. All these websites. Some may want to ask why are we having a lot of unfiled VATs? These clients were working for the client. The client has not paid money again. He just went mute. So also went mute with the filing. So you don't want us to finish this account. All right.
Let's finish it. Okay.
Whose village people has come to our class? If you know your village people have joined our class, please advise them to leave. They are costing us more than good. This is serious. Okay, it has come back to this. So I've moved to other income, right? Do we have other income on our account? No. But in case you have other income in your account, is it commission income? Is it direct premium? Is it profit on sales of assets, that disposal of assets? Is it professional fees? Is it contract income? Is it, you understand? You can just present it. Is it royalties? So any kind of other income you have, you can present it here. This is a page to present other income. But for this account, we don't have other income, so we're going to proceed. Then we're coming to operating expenses, right? So we'll click here, technical fees. So this also applies. If you have all these expenses aligned in details, management and technical fees, you'll be putting them recipient, relationship, description of service. If you have all these details, you can put them. That's the recipient of the technical fees. Management of technical fees, you put it here. Your relationship with the company, if it's a vendor or the rest, you put it here. Description of service, you put it here. Amount. So if you have details of those records, you'll be putting them individually. For me, for this account, I don't have details. So I'll go to the others and put it there. I will move. Is it clear?
Yes, sir.
Yes.
But if you have the details, I will advise that you put all the details in as it's supposed to be. Don't be like me. But if you don't have the details, you can file the account because the truth is most financial statements don't come with all these details. Most companies, let me say small and medium company finance don't come with all this. It's all those large companies that used to take time and write all those details out. So if you don't have those details, you just go to others and put your this in there. Okay, other deductions, expenses, other deductions. So description. So in these orders now, description, administrative expenses, administrative and distribution expenses. Or if it's just admin expense, you put administrative expenses. If it's administrative and distribution expenses, you put it as administration and distribution expenses. Is it clear?
Yes.
You put the amount. So this is the amount we are putting. But this your administration and distribution expenses should not be inclusive of depreciation. Because some people, when they are in their notes to their accounts, let me show you here. In the notes to the account down here. So this is the notes to the account. This is the administration and distribution expenses here that we took to that account. But some people used to add depreciation here. So this depreciation should not be part of what we are putting here because the system automatically calculate the depreciation and present it for you from the one you have put in the beginning, right? So just make sure the depreciation is not part of this thing you are presenting here. So what's the administration and distribution expenses? 18 million
462.
991 5. Is it correct? Then we'll add record. And we'll proceed. So this is it. All those other ones we skip is empty. They're empty. So look at it now. You see, the system already presented the precision for you. So if that you presented the precision, added the to this as precision essence here and put it, it will double count it. You understand?
Yes, sir.
Yes.
But I'm wondering why the thing didn't sum up down. It's supposed to sum up down here. So let's proceed and see. Yeah.
Sorry, please, I have it.
Please go ahead.
Please, what if there are other disallowable expenses? Should they be excluded from the list?
No. Present all your expenses. When you are at the point when you want to
Adjust your profit.
it's when you are preparing tax computation that you consider disallowable or disallowable expenses. You understand?
Okay.
But at this point, you need to add everything up, all the allowable and everything, add it. If you remove it, your account will not balance based on what is on your account.
Okay.
But if you have done the tax computation, then you can recognize all the allowable and disallowable expenses in the tax computation from there. But if you are filing for your account, I advise you put everything because you are going to upload this financial statement at the end of the file, this filing we are doing.
Okay.
Is it clear?
Yes,
Yes,
sir.
sir.
Okay. So current liabilities. What current liability? Let's go back to the financial position. I'm still wondering why that operating expenses didn't some, but then let's proceed and check at the end. So what do we have in current liabilities? No current liabilities. Okay, so we are going to proceed here. We just have non-current liabilities of 17.9 million. Director's current account. And one thing with this, director's current account could be assets, could be liabilities. Can someone explain? This director's current account could be assets, could be liability in the sense that the money the directors have put into the business can be the liabilities to the company. But if the directors are taking money from the business, it's asset to the company because directors are paying the company. So in a financial statement, if you see director's current account in assets, don't be wondering what is happening here now. You understand? Is it clear?
Yes.
Okay.
But for this one is what the money the directors put into the business. 17.9 million. So we're looking for loans over 1 year. Good. Loan over 1 year. Directors loan. Look at directors loans here. 17.909.945. Add record. We always ensure you add record before you proceed. Very important. Always ensure you add record before you proceed. All right, this thing I've started again. English people have come. All right. Must finish this thing today. All right.
Hello, sir.
Yes, sir.
I want to ask a question.
Please go ahead.
If you click the button, are you hearing me, sir?
Yes,
If you
sir.
click the button, some figures appear. Does it mean the thing is already in the system already? The figures.
If I click the figures, do what?
Some figures appear, highlighted, something like that. Then you choose the figure. Like,
You
for example, wanted to pick
yeah, what?
this.
Yeah, what? Okay, what happened is this account I've already filed it on TaxPro Max. So the TaxPro Max is familiar with the figures.
Okay.
I've already filed it, so I'm just using this one now as example. But I've already filed this for the main company account, the main company's TaxPro Max account. So the TaxPro Max is familiar with the figures. So that's why I'm using another account and the figures are still coming up. You understand?
Yeah, I get you.
Yeah. So we're back
The
to
operating expenses as calculated.
it has summed up to the total, right?
Yes, it has.
Okay. So let's look at director's loans here. You are talking about this, right? If I start typing, the figure comes out. This, right?
Yes.
Yeah, I've filed the account already. So that's why the system is familiar with the figures. Okay, this is not read so far, but now would have been almost finishing or I've finished. If not because of this unstable network. All right. Thing is returning. If you want to proceed, just return. Okay, we'll proceed. So ownership and capital structure. The ownership and capital structure is issued and fully paid, 1 million share capital. For here, are you getting me? What we use here most times is the share capital on the CAC document. For a company that has not grown and accumulated other shares or added other shares. Is it clear?
Yes.
Okay. So reserve means retained earnings and any other thing. Retained earnings, share premium, reserve bonus issue, general reserve. All these things this company doesn't have. It doesn't have only retained earnings. So what is the retained earnings? The account is saying the retained earnings is minus 6.9 million. That they made a loss of minus 6.9 million.
Okay.
That's why there is a minus there. So we're going to add record. So we're going to proceed. Profit adjustment. So if there are disallowed expenses, we want to add back. Hello?
Allowable expenses, there is 89 million in entertainment.
I didn't get you.
There is a disallowable expenses. Entertainment of 89 million was among that administrative cost.
29 million.
89 million 208. Entertainment, second to the last. Yes, second.
89,000.
Sorry, 89,000.
Yeah. So this is where we get to add any disallowable expense. Add by disallowable expense, provision already charged against profit. Then deduct exemption and non-taxable income included. So these are the points where we are going to add disallowable expenses as ads. But this, I will advise you do this only if you have done tax computation. You understand? Don't assume.
I didn't understand that.
Apart from your financial statements, you are supposed to do tax computation. So if you have not done, if your company has not done tax computation, I would advise that you choose any figure here. You just leave this and move forward. Proceed. If your company has not done tax computation. Because your you are going to be submitting your financial statement with tax computation. So what can I say? Balancing adjustment. Congratulations, you are done with profit adjustment. Continue with balancing charge and balancing allowance. So here we are going to proceed because I want to show, okay, we don't have loss for previous year. We don't have loss for previous year, we want to relieve. If you have loss for previous year, we want to relieve. If you have loss for previous year, you want to relieve, you can include the loss here. Are we together?
Excuse me, sir.
Yes, go ahead.
What about the return on it that is minus?
It's for,
is it not a loss?
the retained earnings for current year.
Okay, you are talking about
Previous year.
Okay.
Okay, I was saying I will explain why others is not advisable. if you look at this capital allowance computation, what can you see here?
Furniture and
Motor
fitting and
vehicle and furniture and fitting. Okay,
Where is our
computer
computer
equipment
equipment?
is not included.
Good. So anything you put under orders, the system doesn't calculate capital allowance for it.
Okay.
Okay.
You understand?
Yes.
Okay.
That's why most consultants are always categorizing furniture, computer equipment as under plant, machinery equipment, so that you just put it under plant and you calculate the capital allowance for it.
Okay.
Okay.
So anything you put under orders, the computer does not recognize it. Even though it's this motor vehicle, you go back and put it under orders, it will not calculate. If it's furniture and fitting, you go and put it under orders, it will not calculate. So I hope it's clear.
So what do we do then? We should add it to
So
plant and machinery.
that's one of the lacunas of this tax program. This tax program actually have a lot of issues that is unresolved. But most people don't know. It's only we that are, of course, tax consultant have been using it for some time that get to observe all these little errors. We have actually made complaint, but according to them, Nigeria are working on it. But it's still there. Like this pace of investment allowance now, in the next update, they are going to take it out because they have removed the investment allowance. In 2023, what was that tax? That September commencement of tax update last year.
Finance Act.
So there are some lacunas in this loopholes in this tax promax. Because the truth is, most of those FIRS staff, some of them don't even know tax. Most of them don't know tax. It's just my uncle. It's just my uncle's brother's sister is a governor, is a senator. So most of them don't have knowledge of it. So this system has a lot of, okay, this is just one of the loopholes. I said, let me just show it here practically. Where is the computer equipment? Where is the capital allowance for it? And that's how you continue and it doesn't calculate and people move ahead. So is it clear?
Yes.
That's what I said I'll show you in the future. So I've shown you. So we have gotten to the last part of it. So we're going to look at everything we have filed now. When you come and click on this company's income tax, let's look at everything we have filed. Look at everything we have filed. You check, is our revenue complete? It's based on our account. You confirm if your revenue is correct based on your account. You confirm your cost of sales is correct based on your account. Then you check your gross profit if it's correct based on your account. Then you come down. Let's be confirming. Okay, it's correct based on our account here, right? Then you come down to your operating income. You confirm your operating income, is it correct based on your account? Since there's no other income, operating and gross profit is the same thing. Then your operating expenses, is it correct? You confirm based on your account. Then your non-current assets. So because your non-current assets, of course, will not be the same because of that, what do you call it now? That capital allowance lacuna that is there. So most times it's not aligned. Then your current assets, you confirm, is it aligned? Then you look at your long-term liabilities, is it aligned? You look at your net assets. Okay, this one is the computation of this. Then you look at your share capital. So you look down. Then you look at what the system is, the tax the system is telling you to pay. The system is saying we should pay 666,705 for company income tax, education tax 170,000, police trust fund 2.3 naira. So this company has gone beyond 25 million. So this is 20%. This is 20% of the chargeable profit. This education tax is 3%. You know, education tax now is 3% of accessible profit, Abi.
Accessible profit, yeah.
Accessible profit,
And
yes.
this police trust fund is 0.005% of net profit.
I'm on this thing.
So if we have confirmed that,
You said.
ma, are we still together?
Yes.
Okay, so if we have confirmed that everything is okay, you just come down here and click here. That's you have declared that everything I put there is okay. Oh. Let's submit. Error. I wanted to submit and show you something, but then the error has. Oops, an error. This error now is big. And I wanted you to see the next page. By the time you submit there, it takes you to a page where you are going to upload that financial statement. And that financial statement should not be more than, is it 500 kilobytes? That'll be 1 MB, 1 megabyte.
Please, are we uploading the entire financial statement or just statement of action and the P&L?
You are uploading the whole of this thing. As you can see, to the end, go to the notes to the account, everything. You're uploading everything. You just compress it to be less than 1 MB, then upload.
Okay.
So you less than 1 MB, the thing doesn't want to submit. So, but after that submission, the next page is where they will show you to upload. Like you see, like when my colleague Adedayo showed you people that VAT where you click and upload. It's the same thing with this company income tax. But this one now, you are uploading the financial statement. This financial statement, you compress it to be less than 1 MB and upload it there. So when you upload there and submit, by the time you are submitting, now a page where you can make virtual payments. For those of you that do CAC or have seen CAC registration, it will move you to that page, then you can use remitter to pay. If you want to pay with your card or transfer online. But if you don't want to pay online, you can print the receipt out and take it to the bank and pay. Is it clear?
Yes.
Yes.
Yes, sir.
Okay, let me come
So
again.
on this TaxPro Max,
Yes.
it's just withholding tax, VAT, and the CIT, or are there other taxes also?
It's basically withholding tax, VAT, CIT, and there's what is called withholding VAT. But withholding VAT is there are just some companies that are allowed to withhold VAT, which is government organization. Is it Airtel and MTN? In telecommunication, just Airtel and MTN. Then there is oil companies, I guess. Just few organizations are allowed to withhold VAT. So you can file withholding VAT on that TaxPro Max too, but it is rare. Withholding VAT is a rare case. Is it clear?
Yes.
Yes, sir, it's clear.
Okay. Any more questions, please? Before
Yes, there's more question. My question is on assets.
Yes.
You know, while we're talking about assets filing,
Yes.
we said it's possible that we buy some items at different times. Let me say for my vehicle now, if I have 3 vehicles,
Yes.
let me say I have one that's coming from last year,
Yes.
financial account, and I buy one in, maybe my accounting year is from January to December, and I buy one in March, and I buy another one in October. So when I'm imputing, you know, we only imputed one date. So does it mean when I want to impute my vehicle in my account, the one I bought from last year, I'll first impute it, put last year. The one I bought in March, I will impute it, put March. Is that how I'm going to do it?
No, sir. Please hold. Let me bring something up to show you something. There is what is called, like I said earlier, there's what is called fixed asset schedule for we accountants, right?
Yes, for the company, I'm aware of that.
So it's from that fixed asset schedule. I'm trying to find one fixed asset schedule and bring it up and show you so you understand better.
Sorry, sir.
I'm not talking about when I'm computing my tax for my account.
Okay.
I'm talking about when I want to impute my assets into the software, into the TaxPro Max.
Yes.
You get, you know, I know that if I'm computing it for the company, I know how to do the dates, I mean, according to the dates. But I'm talking about when I want to impute it into the TaxPro Max. Now I have those, you know, because I need the system to help me calculate the allowance.
Yes.
So if I didn't get the date right, it won't calculate the allowance right for me. So I'm asking that how do I go about imputing it? Does it mean I have to split those amounts of the asset and say, okay, the first asset, the amount that I bought from last year, I'll put the date there. The one that I bought in March, I'll put the date there in the TaxPro mask. Does that mean that I can input a class of assets, motor vehicle, for example, for more than one time because I want to separate them by date?
Well,
Do you understand my question?
yeah, I understand you. It is two ways. It's either you decide to include every asset individually as at how it is on your what do you call it? Depreciation
On my asset schedule.
schedule, or your asset schedule. It's either you include them individually on how it is in your asset schedule, or you decide to sum them up and impute. So if you have them in detail, you can impute all the assets individually. So if you have a long list of assets, then you have to sit down and take time to impute them individually. But then you may want to sum it and impute the way I showed it here. So it depends on what.
Yes. I get it now.
Yes, sir. Next question.
Sorry, sir.
Hello, sir.
Hello.
Yes, go ahead.
Hello, sir.
I can hear you.
So I want to ask, from the TaxPro Pro Mass,
yes,
how
sir.
are you going to be certain to confirm that what you have done is correct? Like that distribution schedule where we to confirm that what we did is correct, like that schedule that we saw, that there was a difference between we calculated and the other one. So for how can we verify that what we are presenting is okay?
Well, how do you verify? Because we explained that what is on the depreciation displayed in the account is different from what's on the TaxPro max, because the TaxPro max just charge 20% on the whole sum, whereas in our depreciation schedule, those assets, that's the cost of all the whole assets, but they were not bought in the same day, so their depreciation varied that summed up to that amount. So if you remember, we just picked the figure of the depreciation in our asset schedule and replaced it on the TaxPro max system in that depreciation place with the one they calculated, and the thing went through.
Okay.
Did I answer your question?
Okay, that's just, so that's the only place that there will be variance. Let me say so.
Yes, for depreciation.
That's the only variance. Oh, okay. I'm okay.
So while you are imputing all this, you have to pay maximum attention so you don't ignore some places, ignore some, like most people will not see that depreciation and will just go ahead and proceed. But then they will later your position in the tax program will depend. So at the end of the day, at that last summary page, you see that it will not tally.
Okay.
Yes.
That's okay.
Any other question, please?
Hello, sir.
Yes,
sir.
Hello, sir. More questions?
Please, is PPE schedule and asset schedule, are they the same thing?
Yes, ma'am. PPE just means property, plant, and equipment, which is a segment of fixed assets.
Okay.
So it's the same thing actually. So some people may just have PPE, that's property, plant, and equipment in their organization. Should may decide to call it PPE schedule. But for a company that has both intangible and tangible assets, may decide to call it asset schedule.
Okay.
You understand? So if you have intangible assets, okay. Next person, next question.
Okay, please, I wanted to ask if how do we go about even coming on board on this TaxPro Max? Do we have to visit FIRS, or is it something one can do on their own?
Okay, that's a very wonderful question. Thanks for that wonderful question. Let's see what TaxPro. This TaxPro Max. I wanted to show you this thing. But remember on that first page, anytime the TaxPro Max log us out, you used to see login, register, and the rest. At this page, what can you see here? You can see login. Can you see my screen?
Yes, sir.
Login,
register, validate CC, non-residents.
If a company is registered after 31st of August 2023, that's from 1st of September 2023. From that time where that Finance Act was started, bam, that 2023 Finance Act started. If your company was registered from 1st of August, you can register your tax promise online through this place. See, can you see it? Once you click on that register, you come to corporate affairs, click on corporate affairs. Then you input the RC number of the company. Then is it a limited, is it a trustee or the rest? Then you search. By the time you search, the company opens, then they will send an OTP code to the number, to the person that registered that company, or you may choose them to send an OTP to the person that the company's email. Then you apply the OTP, then the tax form is open for you to fill the basic details of the company. But then if your company is registered before then, you need to go to the tax office physically to open the tax form. So if you go to the office, they will give you a form to fill. Tax Promax update form to fill. Clear?
Okay, so basically for the old companies that were registered before that Finance Act, we all need to go to FIRS to go and register.
Good.
But for new companies, just register straight on the platform.
Yes, for a company that will register before then, you need to go to your nearest FIRS office to the registered business address to open your Tax Promax. But for a company that will register before by 1st of August, you can do it online. However, yesterday, for the past 3 days, you will request for OTP code and it will take 12 hours. And OTP code expires in 30 minutes or 10 minutes. That means even the online thing is not effective. Throughout last week, we have been struggling with it. They don't send the OTP code on time. So the Nigerian technology factor, network factor is even playing here too. But then if the network is good, you can register the OTP, you register the Tax Promax online for a new company. But if the OTP doesn't work, you are still be constrained to go to the tax office. The funny thing is in Nigeria, tax people always want you to interface with them so that there will be some handouts passing one place to another.
Yes.
So it's always that way. So they will not even be bothered that the online system is not working properly, so that it needs to still come to the tax office
It's
and
true.
grease their palms. Any more questions before we go?
Hello, sir.
Yes, sir.
Yes, I have a question.
Another question.
Please go ahead.
Hello. I have a question.
I can hear you.
In this aspect you're trying to talk, what's the role of an accountant here? Because like I was thinking this template that is being owned by maybe a chartered accountant or a tax consultant, that you have it, then you contact maybe any country I want you to present to do their tax for them. Then you use this format and fill the details and send to FIRS. Because like what you said that the company has to register. Me, I thought
Come again,
I'm
sir.
trying to say the role of accountant in this aspect.
Of filing tax?
I'm asking the role of accountant in this pro format of filing tax. Me, I thought the company will come to you, then you file the tax for them. Not like we're trying to say that they have to open this the tax promax for them to be registered. Me, I thought the company come to the accountant or the tax consultant and they do this thing and file for them. Then you charge your own commission on that.
Yes. Most companies, this information that is seeming simple to us, most people make a lot of mistakes. For instance, as you can see, most lawyers are coming into tax and they used to make a lot of mistakes, right? Because companies get people to do this thing for them. But before you get to file, you must have registered and opened a tax promax account for the company. Some companies have accountants in-house, but some of the accountants can actually do this, but some companies don't have confidence in their own staff. They get to outsource it for people to do it for them. And some companies try to, like this common information of this equipment that they're exempted from capital allowance. Your company is already losing money. Will pay more taxes because they didn't provide capital allowance for that. So because of all these loopholes that many people are not aware, that's why companies outsource this into tax consultants to do it properly so that they don't make sure they don't lose anything or they don't pay more.
Okay.
Yes. But then it's what if as an accountant of an organization, you can actually do it. Or you can do it for clients. You can look for clients and do it for them.
Okay.
Yes.
Okay.
Hello, sir.
Yes, ma'am.
Hello.
Yes, ma'am.
Please, can one serve as an agent? Can one register as an agent to FIRS?
An agent?
Yes, maybe. Is there a way one can register? Okay, well, I want to be an agent to FIRS or so that you'll be looking for company to be filing for. That is just your work. Can one register such business with FIRS? Is there an opportunity like that?
You don't necessarily need to register with FIRS.
Okay.
Once you have been able to understand the details, intricacies, and knows exactly how to file all this, all the whole filing process, and you are able to get clients, you can start. But then this is just an app. But then the more professional way to do it is either you have a practice license as a tax practitioner, or you have a practice license as chartered accountant. However, this is not rocket science. Anybody can do it. If you have followed the process, you have the experience, and you are able to study and know of the loopholes. And you have learned from somebody that is good.
Yes.
Because most of the people that do tax consultants are people that have learned or work under that have worked with people that were able to show them how to do it. Though most people complain that upcoming on these firms don't show you everything. But then if you yes, currently I have a platform that train people how to do it. We're enrolling for two of side hustles for accountants. These are the kind of things we teach in class so that accountants can be able to make money on the side with all this. You don't necessarily need to go to FIRS to go and register. Once you have the knowledge and you can convince people that you can do this for them and then give the job, you are good to go. So FIRS don't have a system. Yeah, FIRS don't have a system like CAC where you have to register to the agent before you do it. I believe I can see Madam Ike Okore. She's here. Ijoma.
Yes, one of your students.
One of the students in the side hustle for accountant. I believe she's doing very well. So you don't really need to go and register with FIRS. You just need to know this, study it properly, learn from who knows it very well, so that you don't make all those mistakes. Because it's frustrating to make mistake in a client's work and the client is dragging you. You are looking like you don't know what you are doing.
So I have a question.
Please go ahead.
Okay, do we file for personal income tax on TaxPro Max?
Personal income tax basically is State Board of Internal Revenue Service.
Okay.
For Lagos is Lagos State Internal Revenue Service. For Abuja is FCTRS, and other states as the case may be.
Okay, thank you.
File to the
okay, also just a reminder on the document, Mr. What's his name? Adedayo.
I'll get
Yes, sir, I have a question.
share it to the group. I've already shared 2 documents while the class was ongoing. If you can go through that one too. As the class was ongoing, I shared 2 documents on the group. They were still going
Yes. Okay, thank you, sir.
Yeah.
Hello, sir.
Yes, sir.
Personal income tax, does they have a platform like TaxPro Max as well?
The states, that is a state matter. But then everybody is on his own. I can say Lagos has the strongest platforms online. Apart from Lagos, Abuja is trying. And I think Rivers. But those others
they have also something like
Port Harcourt is also very good though.
Okay, Port
for
Harcourt.
payee.
Port Harcourt, that's Rivers.
It's on
now.
a platform too. Yes,
Yeah,
Rivers
that's
State.
Rivers. Yeah. So Rivers is good. Lagos is good. Abuja is trying also. So for those states, you can actually do something online, but then you still have to have that physical touch. But for Lagos, I think it's totally online. For Port Harcourt also. But Abuja, sometimes you need to still go to the office because of all these network issues and all.
The network in Abuja is very, very poor. Since for weeks now, I've been trying to register my colleagues on JTB to get their individual thing. It's very hard.
So sometimes I used to assume they do that thing on purpose so that you come and interface with them. So there's a platform, but then the network barrier. But I think Lagos is effective and Rivers. Then Abuja, I don't know.
Rivers is very effective. The only time you need to go to their office is when the tax clearance is ready and you need to go and collect the hard copy tax clearance. Though we don't have the card type like Lagos State here in Rivers State. They still issue us paper tax clearance, but that's the only time you have to go to their office. Every other thing you can do from the comfort of your office or home.
So, sir, that is it. Each state is individual, so everybody is struggling with their battle.
Okay.
So you may have worked in Lagos, you are filing, or in Port Harcourt, you are filing online seamlessly. Then if you transfer it to another state, where their own process is in shambles again. You see explain shambles. So state is Oyo, everybody is on his own.
Thank you, sir.
Yes.
Thank you, sir.
Any other question? Let's close here and go and rest and wait for tomorrow. Tomorrow we'll be discussing.
Thank you very much, sir.
Yes.
I have a question.
Okay, ask.
Okay, thank you. Is from all what has been computed on the this platform, I didn't see anything like externality tax, such as carbon tax, pollution tax. Is there anything like that in Nigeria, or is it not available? And
Come again.
also, pardon?
Anything? Come again, please.
Like externality tax, like pollution tax, carbon taxation that is being, like, companies are expected to pay for the externality that they are generating or creating.
Okay, thanks for
Then
that question. Go ahead, finish.
My second question is on cryptocurrency. Is there anything like digital taxation?
Yes. Okay, let me start with the second one. The government is the FIRS are still, let me just say the government are still working on the modalities for that digital taxation. But then they are fully adopted that, okay, we are going to do digital taxation, taxing of the rest. But then they are still fighting with each other. Because the government now is saying cryptocurrency is not in place. And then they are trying to still put in digital taxation. So the whole process is still on the confusion mode.
Okay.
Yes. Then for the second one, your first question, sorry, there is what is called what is called, there are federal taxes, there are state taxes, there are local taxes.
Okay.
Local taxes has to do with all those tenement rates, all those carbon something you are saying, and all those local taxes that has to affect the immediate community. Like for Abuja here, there is what you call AMAC. They used to go to people's office and receive tenement rates, signboard, radio and television. In fact, in Nigeria, if you have radio and television, you're supposed to be paying tax. But then Nigeria doesn't have the capacity to be enforcing all those taxes. There are a lot of taxes on local taxes gazettes. If you can get hold of any state you are, or if you can get hold of the local government gazette for taxes, you see that there are a lot of taxes that we're supposed to pay. There is signboard, there is truck. If your company has truck, you're supposed to be paying. There is signboard, there's radio and television, there's tenement rate, there is ground rent. There are a lot of them. So I think that falls in among the local taxes. And local taxes don't have a structure yet. There is a gazette. There's a gazette and prices are attached to those taxes. But then by the time the consultants that are assigned to collect those taxes come to you, they'll be negotiating lower. Or sometimes they will collect it and put it in their pocket. They'll not remit to government. The thing is just, so there is no structure for it yet. But then there is something like local taxes and there are gazettes. Gazette means like a document that carries the prices, the taxes, their rate, the rate for big company, medium, the size of company that should pay what and all. Is it clear? Did that make sense?
Yes, sir. But so there is not.
I didn't get you.
Things.
Come again, ma.
Is there nothing like pollution tax at the federal level, like carbon tax at the federal level, being charged by FIRS?
None that I know of actually. I think except is a very. I think except is maybe a tax treaty agreement with, because there are some big companies like Dangote and the rest that can negotiate with the FIRS. Okay, look, that's why you see most of the times they even use their corporate social responsibility to be able to reduce their taxes. You see Dangote buy plenty cars for police, and you are thinking that Dangote is a good man. You don't know that it's a form of trying to recoup taxes, or he will talk to the federal government, okay, if I make this road, I will receive a tax relief of XYZ. You understand? So those, basically, I know those taxes to be local taxes, except on special cases, which I've not come across. But then if anybody has that knowledge, the person can share with us here. But then on TaxPro Max, there's no provision for those taxes yet, except they have not updated it.
Yes, they are local taxes. They are administered by the local governments.
Okay. That's
Hello,
fine.
sir. I have a question. I have a question, sir.
Please ask.
Okay, my is more of I want clarity on something.
Okay.
This CIT membership.
Yes, sir.
I know it's given to ICANN member, ANAN member, and barrister.
Yes, sir.
I'm asking, I want the clarity. Why are lawyers being given this membership? They don't have any background in tax or accounting, but they're being given. That's why a lot of business is being happening every time. If tax or if a barrister handles something like that. So I want your own view or your clarity on this. Why are lawyers being given membership of CIT?
Okay, tax to a great extent has to also do with tax tribunals and the rest. Tax basically is more like a statutory something. You understand? But then I just want to say something. The certification is not given to them for free. Lawyers go to, recent, lawyers go to, they have like a tax program for them before they qualify to be given the certificate, where they train them about the taxes. Now they are not given for free. Even as a chartered accountant, you are giving for free, but then not for free. You are giving without writing an exam, but you need to have a strong attestation that you have worked in the tax space and you have grounded knowledge from a reputable authority.
And you pay money for it, almost 350,000.
No, it's more than 350. I think the induction is 375,000. You understand? So they think lawyers are good to go, and lawyers are actually dominating the tax space. You see, a lot of lawyers are running from their profession and coming to the tax space now. So I think we have come to an end of this class for today. Let's prepare for tomorrow. Tomorrow is going to be a very magical one again. We are going to be taking anything that has to do with pay, and we're in communication. Sorry for the break in communication. My network just went off. So I was just about running off the class. We are going to see tomorrow to discuss other major areas of this taxes. That's regarding to pay. And we're still going to take questions, and we can even take questions from today's class also. So if you have any more questions, you can just write them down or think about what we have discussed in class today. If you have further questions, then you can come. We'll still address them tomorrow after the pay section. Thank you, everybody, for joining this evening. I wish you all a wonderful evening.
Thank you.
Thank you,
Thank
sir.
you, sir.
Thank you so much, sir.
Thank you so much.
Thank you so much, sir.